What's up, everybody? How you doing? Good morning, good afternoon, good night. Welcome to the BitLab Academy daily stream. I hope you're all feeling good. Hope you're all looking good. Hope the charts are doing the work for you. We got some things we're going to be talking about today, breaking down what's going on with Bitcoin. Did we get to the bottom of the bounce? Is this the perfect time to be buying? Are we waiting on a little bit of global liquidity? What's going on? Are there signals in the charts that show that there's actually a reversal in store? Or are we waiting on the wrong thing? We've got a lot of great news, a lot of good things we got to talk about today. So I want every single one of you, as you pour in, hit that like button, hit that subscribe button, ding the bell, get involved, because we got a lot of stuff we're going to be covering today, making sure that we are ahead of the trend, not always trying to follow it, not always chopping ourselves out of the market. So if this is your first time here, I just want to say welcome to the show. My name's Kelly Kellum. Welcome to BitLab Academy. Positive, empowering tools, resources, community. That's what this is all about. So welcome to the show. We got some things we got to cover today. We got some charts also breaking down some potential buy opportunities and bounce scalp trades that we have here in the BitLab Discord. John Dalton's been sharing some really good charts in here. Now, I just want to say, are you scared? What's the market doing? Well, when we talk about fear and greed, we got to talk about this chart right here. I know everybody's been talking about fear and greed index lately, and they show just the metric. I really like showing this chart instead of just the number metric 0 to 100, because you can see how that number is related to what's been happening with price action over time. And what we can see right here when we look at the previous cycle, look at this previous cycle from down here at 3,200 all the way up to just shy of 14,000 at the top. We can see on this dip, we got all the way down into 47, all the way down to 20. I'm looking at that score mark, as you can see on that flag. We can see all the way here, 23. You get all the way down here to 9. Of course, this was a black swan. So if we just consider this portion right here, we did break down into the 20s, the low 20s, okay? When we look at where we're at over here, didn't break below 30. Look here, didn't break below 40. Look right here, didn't break below 40. Where we're at right now, 55. 55. Is this indicative of what we've been talking about over the last couple weeks when we were talking about what's going on with a potential drop that's going to be larger, somewhere between 30 and 60%? Why do I say those numbers? Because in previous cycles, we've seen, look, 40% drop, 40% drop twice before this halving. We see right here a 53% drop, not even including the black swan event here that actually took us down to over 70% to the downside. So let's be a little more conservative. Say we don't get a black swan. That was a 50% drop. Where we're at right now, we've only seen 20% drops. And where we're currently at in terms of the price action from the previous high, come on, you can do it. Give me a ruler. There we go. From the previous high to where we're at right now is basically right in line with what we've already seen. Do we need a larger washout? Do we need price to break down? I want to see everybody in the chat right now. As you've rolled in, let's do a little bit of a roll call. If you're here, let me know what you're grateful for and what you're buying or selling. Drop it in the comments right now. Drop the comment down below if you're watching later. And again, as we get this stream started, make sure you hit that like button. Make sure you look below the video and it says subscribe. Join us here, and welcome to all the members that are here, all of you with the BitLab beakers next to your name. I see they're filling up. That means you've been growing as how long you've been members. So we see Azo Vasquez says 50K. What, you think we're going to go into 50K? I do too, but not yet. When we talk about where we're at on the price action right now, I want to point out something that I noticed earlier. Look at this chart formation right here. This chart formation looks eerily similar to what we saw right here. This large impulse to the upside, reset, and then a last attempt to the upside right here where we got the market cycle all-time high top. And then we ended up breaking down. Fall, retrace, fall, retrace, fall, retrace. What we're seeing right here is very similar. A market top style formation of this trend right here. Because this will be a market cycle in itself of this low W formation, rise, retrace, continuation, retrace, continuation, retrace. Where's this retrace coming to? Ultimately, this is my target down here. And I don't know if we're absolutely going to get there, but I'm going to have buy orders that are prepared to take advantage of it if the price comes down to this level. Now, why is this? Because I'm looking at a confluence. This is what we want to do. When you're trying to figure out, what type of trade, what type of positions that you're looking for in the market and where to pull the trigger on those things, what we want to do is use something I call the stoplight action protocol. You want at least 3 green lights. You don't want 2 green lights and a yellow light and then like you're not. No, you want to find confluence. This is all about confluence. Multiple different data points price action trends, and where the price currently is at in relationship to all these things, in relationship to the data signals. So you can identify areas of interest and also areas of reversal. In this case, we see price action pulling back right here, but this is on the 3-day chart. If we get down to the 24-minute chart, oh my God, we reached the bottom, it's going up. Well, are we? Let's take a look at what we're seeing right here. Some people would say that this is an inverted head and shoulders. In fact, we have a chart right here from Trader Tardigrade, and this is not an incorrect chart. This is an inverted head and shoulders, shoulder, head, shoulder. Now, this would indicate, if we're thinking about it this way, this would indicate that the relationship to where the target would be essentially is we're looking right here at essentially a neckline, right? We go from the neckline to the bottom of the head, the depth there, and you take a measurement to the upside. Do I think we're going to break out and push all the way up here into this $42,000 region? It's possible, yes. I think it's probably more unlikely than not. Why? Because we have all these other data points we need to consider. If we come out here, let's go to this other chart right here. Okay. So looking at what we have going on right here, I shared this in the BitLab Discord earlier. This is what I'm a little concerned about. This is what I'm concerned about right here. These previous lows, this is on the, let's go to the 4-hour. There we go. These previous lows, these candle body lows and the wicks that kind of dip through it, clearing all this liquidity, but area of interest, this previous area of interest of bottom is going to be an area of interest for a potential top on any run up that we have right here. And what do we see initially right here? We have an impulse to the upside. Impulse to the upside, right? Look at this wick on this 4-hour, right into where this zone is. Not only that, we see from this point right here, this breakdown point, from here all the way down, and this is drawn a little bit wonky, so let's adjust it. There we go. This golden pocket is right in there. The golden pocket is an area that you want to look for a potential reversal into, healthy reversal into, potential rejection back down. And what do we see? We see previous low range right here. We have the golden pocket right here. And if we turn on the BitLab, let's go ahead and turn on the BitLab volume. There we go. Turning on the BitLab volume, which gives us these order blocks. See these red blocks right here? This is areas of interest in the chart of where liquidity interest came into the order book, where people were throwing in large orders at a particular price range. And we see, look at this. Let me turn off the BitLab intelligence. Look at what we're seeing right here. Price action getting sucked up into the order block, right into this previous range low box that we have, as well as the golden pocket right here. So we have 3 different areas of interest suggesting that this was all aligning with a specific area that we could target. Now, this could be for a profit, like if you took this bounce, potentially taking some profit here, or if you're trying to figure out where to add to a short on the way down, because on this time frame, we do have a downtrend. See this downtrend coming down? High, lower low, lower high, lower low, lower high, lower low. Currently, we are still in this structure. The trend is your friend until the end. And this is going to be ultimately the most relevant to what time frame you're trading on. If you're looking to stack for a position all the way into October of 2025, then you shouldn't be looking for shorts right now, unless you have a separate trading portfolio with a small allocation specifically only to trade small time frames. Don't jump in the same trading portfolio. You might have 2 or 3 different trading portfolios, allotments towards what you are trading, allotments towards how you're engaging with the market. So in this case, if you do have an allocation for, basically scalp trading and smaller swing trades, then this could be an opportunity to short again. Why? Because what we're seeing is when you see this move down like this, you have essentially a trend line here that you've established, price action coming up into it, opportunity to short. Also, you have the order block right here that this came up into. Price action drops down, comes right up into this, opportunity to short. But we want to watch what happens in here. This is looking like it wants to still test back down, maybe only to this 38.8, maybe only down to 38.5, somewhere in this region. We're going to want to watch that this doesn't form a W pattern for a reversal to come back up. But as it stands right now, I do think this is going to test somewhere down in this range again. And at that level, we can determine whether or not we're going to ultimately make it down into that target zone that I had outlined on that other chart, which is also outlined on this chart. We can move this over a little bit since there's so much stuff on here I had for the Discord. But that's this area down in here. This is the area at which This also came down, found support, and it's sitting right above where this level is right here. And in addition to all of these things, I want you to notice something. We get another confluent place of data, and that's the Fibonacci, basically from this low to this high, a retracement down. Look at where we came down to. We bounced twice on this 382. So this shows that this fib is an effective fib that we can utilize for essentially a bit of a roadmap of price levels to watch. And look where the golden pocket is, right here at these lows as well, and just above where this this range support is, which is the previous range highs right in here. If we zoom over, let me move this out of the way. See this range rejection here, and it's right once we broke through this range support there, and it's sitting right below where not only this rising level of support is, but also the golden pocket is. So many different points of confluence that are telling me there's almost like a weighted interest in price action, basically falling and coming down into this level. Now, am I going to put 100% of my buy orders in the charts for this level? No, because I hedged myself, because as accurate as I have been on this channel over the last, several months, I feel very fortunate to have been able to been reading the charts very correctly. I mean, I remember over the last couple of weeks, I think some people thought I was out of my mind when I was talking about a quant, when it was, if we come over here, let's go to, that's a 15-minute, 6 hour. When it was up here, I was talking about price coming back down into this zone, and if it loses, it's coming down and testing $100. What did it do? It came down, look at this, tested $100.40, okay? And I even re-emphasized this when the price was over here. Similarly, we're talking about Avalanche. We've been talking about Avalanche a lot on this channel as well. They've had a huge ecosystem growth. They've been doing a lot of great development in their communities, and there's just a lot of interest in this, especially with partnerships going forward and what can come from that. But if we delete this, price action got all the way up here. This is not Avalanche. What are we doing? I had Avalanche on this chart before. There we go. So we got it all the way up here to $49. And look at where we're at. When we started breaking down and we had this new low, this new high, we also had this head and shoulders pattern telegraphing price was going to be breaking down. I was like, man, if we break this, I think we might be visiting 31 and then coming down to 27. The next stop from there will be down here in the $23, $24 range. Price action just keeps following this path. And this goes all the way back. This goes all the way back to this, ultimately, this chart that I shared January. And in 5 days will be 1 year from the sharing of this chart. This was my suggested idea of what the price action pattern could be over the course of 2023 into 2024, into 2025. Now, has it been exact? No, but it's been pretty damn close. We had 2 humps here instead of this one, but ultimately we saw this move like this. We see the price action push all the way up into the golden pocket, which is this $48,000 level. Now we're asking here, what type of pre-halving dump are we going to get? The retrace, rise, retrace, continuation. Everything we are seeing right now is ultimately absolutely as bullish as it can be for the setup of the ultimate parabola that's going to result for this after the halving. Shout out to Sam Thomas for the $20 super chat. Have not heard of PopCat. Thank you for bringing it to the attention. I appreciate the super chat. Now coming back over here, I want to just talk a little bit more about these levels that we've been talking about. Everybody wants us to go up. You felt like you missed the boat. You felt like you missed the boat here. You felt like you missed the boat here. You felt like you missed the boat here. Some people bought this top only to have the price give you another opportunity on the way down. Bouncing at the golden pocket here. From this move up, comes down. Look at this. Bounces right here first on the 382 and then comes down to this 618. This is essentially what I'm talking about on Bitcoin. So we came down, bounced on the 382. Yes, we're getting a little bit of a bounce, but don't look at a bounce as, oh, I have to hop in before it goes all the way back up. Now there is an inverted head and shoulders here, which suggests that maybe there's going to be a little bit more of a move to the upside. Ultimately, we have all the lines on the chart that we've had for many months now, developing over the last, year, that if we do get that dead cat bounce, recognize, let's come back over to this chart right here. This chart right here. Ultimately, we want to look at this. Oops. Sorry. We want to look at this, this blue line, which has been a determining factor of the strength of the trend. Look at this, support, support, falling. Resistance all the way up until we broke through, and then support all the way up. If we zoom in on this, this is what we want to watch for. If we do start pushing up, we've got a lot of levels above us, the previous range lows, and then this diagonal right here, which is marked this trend right here, which is going to be a little bit of another hurdle. But then in addition to that, before we even get up to the blue line, we have this larger dotted line that comes all the way back here into November and October, all the way to September of 2022. Resistance, resistance, support, resistance. Look at this. Is it over here? You're like, is it really a good line? Because it doesn't touch there. But look at this, resistance, support. A lot of chopping around it. Doesn't feel very clear, but I had this drawn for months. Didn't change it. Then we see as price matured and we got up into the zone, it ended up acting as support, 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 until ultimately, look at this, we fell through the support level. This tells me that when we, let's go ahead and just do a array so I don't mess up that. It's going to go like this. There we go. This is that line, this line, this is that line right here. Let's go ahead and make it a little bit brighter. There we go. This is that line projected out, that macro sort of line. So we have, look at where we're at right now. We've done none of the work that suggests that we're actually going to be taking that move to the upside. We may get that bounce. And at this point right now, anything that's coming up in here that doesn't even take out this level, especially option J, this bounce here and this rejection, this is ultimately where I think if we do get a stronger bounce to the upside, ultimately somewhere in this 41.7 to 42.4 range, I think is more likely than not that we will reverse back down. But as it stands right now, we are making a move to the upside. But does that mean that we should just jump on the bandwagon? Well, we're already seeing a little bit of weakness in here. So let's be a little bit more patient. Let's go ahead and double click on this. And we can see, look at this impulse, large, a little bit smaller. And I want you to notice something. When we see this option T, this is pretty vertical. And then what we see right here, this starts getting a little bit wider, right? And then what we see right here, look, a little bit wider and not as much of a momentum to the upside. So what we're seeing is this coming up and losing steam into this area. So this gives me a little bit of forewarning. It doesn't mean it can't continue higher. It just is, it's telegraphing to me that there's a little bit of weakness coming in or an exhaustion of the bulls to truly take that higher. So what we want to do, if this does push up into the zone, we're going to want to watch for a breakthrough of this $40,500 mark and clearing of this range low sort of range that we have here from 45 to 48. And of course, we have this downtrend resistance right here. And as it stands right now, looking at the 24-minute, we did get a little pop of positive money flow, but the momentum's coming back down. Stochastics are angled up, but there's some mixed signals in here. There's not a concerted grouping of data saying we're going up, up, and away. There's making some attempts. Let's be honest, there's still all these different news stories around this that are shaping and stealing the wind from the bulls and the bears, both in both directions. There's a little bit of hesitancy because we talked about this yesterday when we see a lot of the miners were offloading net negative, right? Miner net position change, a little bit of pressure on this top that we had here, which we're seeing resulting in the price action pull back a little bit. So everything's looking very good right now. And it's looking even better if you have a mind for looking for opportunity, not looking for confirmation support. You don't want to support your confirmation bias, okay? You don't want to look for, you don't want to be looking to really just identify signals that support the direction you think it's going to go. I'm very bullish, but things are looking like maybe there's a little bit of weakness that needs to happen. And you know what would be really excellent, actually, to tell you the truth, is if we don't get any drop whatsoever. And in terms of like breaking below this low, what would I think really actually mess a lot of people up? Let's go to a cleaner chart right here. What would mess a lot of people up is if this area became a range. If this bounced up in here, trickled down and just traded sideways with maybe one washout to the downside, one washout to the upside, and then continuation. As it stands right now, we're on the cusp of one of the best times in Bitcoin, in crypto, in blockchain, the integration and adoption of this because of the mass awareness that's already started and underway. But as these different money managers and fund managers and BlackRock and ARK Invest and on mainstream news media every day, shaping the narrative back to being positive about Bitcoin after they fudded it for years. And we're actually seeing this be a hedge against the monetary debasement the world over. We are at the cusp right now of one of the biggest adoption cycles that we've ever seen in Bitcoin, because now it's in people's awareness. It's in people's minds. People have been hearing about this for years. And now we have some of the most respected institutional fund managers in the world singing its praises, saying that this asset transcends all other assets. It transcends all other currencies. This is going to be a flight to safety, a flight to value. So let's not worry about any dips right now. These dips are creating the opportunities so that we can capitalize with the most profits in this next bull market. So let's look for our targets. Let's take the shots. Let's wait for the confluence of data to take those shots if you're trading on small time frames. But the time is now. The time is right now. So with that being said, a little message of hope for everybody right there. The question is, as you're watching this right now, look down below this video. We have 40 likes here and over 100 people in here. Every single one of you. Do Crypto some love right now and hit that like button. Subscribe to our channel. Let's dive back into what we want to talk about here. So a couple other things I wanted to just cover here. We talked about this a second ago. Update: BlackRock and Fidelity now hold more than $3.2 billion in Bitcoin. Everybody's so worried about the outflows from GBTC. This is a rotation of capital we knew was coming. So let's not let that FUD narrative or news articles tell us any different. This was not a failed ETF launch. Take Grayscale's flow, negative flow, you know, the capital rotation out of Grayscale and these other. We're breaking records with or without Grayscale involved. And there's enough institutional demand and retail demand in the ETF sector to buy up that flood of Bitcoin that's coming out of Grayscale. This is incredibly bullish. This is not a bad thing in terms of how the ETF went. So let's not let that, bring us down any longer. Also, we see right here, Bitfinex, Bitcoin margin longs buying the dip. So margin longs, basically leverage, buying the dip. Now, this could be a good thing, yes, but this also could set us up for further downside. Well, why would longs set us up for further downside? Because if you have leveraged longs coming into an area, you're also creating new liquidation points on the map for if price were to come to those levels, that those longs have to basically force close or liquidate, and that becomes a forced seller, which is what gives you those quick moves to the downside. So when you see stuff where you see, oh yeah, there's longs coming in, great. But if you have margined longs coming in, you're also setting up a recipe for quick movement to the downside if price gets pushed down there to basically liquidate those positions. So this is neither here nor there statement. I just wanted to point out this type of chart. When you see it, it's not just as nuanced as people are buying, let's go. No, it's, hey, this is also setting up. When you see a lot of spot buying, spot meaning not leverage, meaning if you have one Bitcoin or say you have $100, you're buying $100 worth of Bitcoin with no extra, no X, that's spot. When you're putting margin or leverage or derivatives or options, then you're also taking a bit of money. You're basically borrowing money from whatever trading exchange or institution that you're trading those margins or those leverages on, and that creates liquidation points. If the price pushes past that threshold, you have to do the opposite trade that you entered. So if you did $100 million long, then you have to essentially, there's $100 million short that potentially could offset that. Does that make sense? You have to cover the margin, and the higher X you have, the tighter window that margin area is. That's why when we actually, I'll pull it up on Discord, Joshua Jake in the BitLab members Discord, bitlabacademy.com. If you're a member there for the courses, remember we talk about these courses on a daily basis. Part of this, the better benefit of all of this is the fact that you, with the purchase of BitLab Academy, you also get the premium Discord. And in here, Joshua Jake's been sharing some really great stuff. He's been outlining exactly the different liquidation levels. And these come from those margins that we're talking about. You can see the areas of interest of where there's hot zones on the chart. That's what these bright colors are. If price pushes up into this, you can essentially be a short squeeze and basically close out these shorts that forces longs, and you get a very quick movement to the upside, and similar to the downside. So what we're seeing on all these different charts, he's breaking down essentially these areas of interest that are coming in from people. This open interest is what they call it. High risk, high reward, but high risk. Most people, let's say over 90% of people that get involved with leverage trading end up getting wrecked multiple times before they make money. So this is one of the reasons why here on BitLab Academy, I don't really push leverage trading. It's something that you have to choose to do if you want to do it. But that's why I'm so big on strategy. I'm so big on the stoplight action protocol. I'm so big on waiting for confluence and that the confluence of data coming in to support highly probable trade while still practicing risk management. Most people don't do that. They say, well, I see this other guy made a lot of money leverage trading, so I'm going to put my entire crypto portfolio 10x it, and I'm going to be rich next week. Doesn't work like that. How do you think the casinos in Vegas were built? Not by people winning money from the losses. And that's the same is true in leverage trading. So let's get back into these charts. We got some other things we want to talk about here. We do have a potential sign for a little bit of a short-term rise. So do I still think price is going down? Yes, but in the short term, let's say in the next 3 days, we may have a little bit of a resurgence in price action to the upside. And we just covered that. We just talked about that. But we see right here on this chart, we've already got a bit of a trend line that's formed right in here. So if price action does continue up, look at where this area of confluence is. If this came straight up, this is about even with a lot of these wicks that come down in here. They're kind of testing that sort of range. If I put it on a 6 hour, you'll see this. See this? All these lows. Put it on our 2 hour, you'll see even more. Straight right up in here. Look at that. That's right. See this? If this breaks up into the zone, I expect more likely than not, maybe we'll get a wick above like we see here, trap, but more likely than not comes up into this region and, we'll decide what to do from there, but more likely than not, break down. We see as this came up into the zone, the stochastic's already rolling over. So got some things. Yes, we have a little bit of an idea for a potential move to the upside, but I think it's going to be short-lived. I think there's a little bit more pain to come. And this also is reflected here in the global liquidity. Global liquidity showing we're getting a little bit of a retraction still continued here. When this kicks over, we start seeing this paired with the halving, paired with the ETF, all systems go essentially is what this would be called. If this global liquidity starts pushing up right in the midst of all the most bullish situations in the history of Bitcoin coming into confluence on a market cycle. Currently, this is still refilling its gas tank. It's still coming down, which is also marked by a little bit of pressure on the markets. So let's just be aware of that. I shared this yesterday, where we're at in the market right now with the price action. These three levels, this 21-week moving average, 200-day moving average, short-term holder cost basis. When we're under this cloud, it acts as great resistance. When we're above it, especially here, we see it acts as great support on the way up. And the price action dips into this cloud, into these three moving averages at different points along the way. But where we're at right now, when we look at this, this is zoomed in. So look at that short-term holder cost basis is about 38.3 right now. 21-week moving average is about 35.2. The 200-day is about 33.5. Now, as the time progresses, these are still rising. So these are all perfectly in line. If this were to dip, maybe bounce right at the short-term holder cost basis. Maybe it doesn't go below 38,000. But we can have a limit order in there so we can take advantage of this buy of basically laddering our entries as the price action falls into the zone. So this area and then, that 35 region and then that 33, 34 region gives us that zone that we've been talking about on this chart when we zoom out here of this right in here. Now the 38 would be right here, essentially where we just came from. 38.6, so we can go a little lower like this. So right in there gives us the areas in which we can allocate some of that dry capital to be in position to take care of this bull market as it arrives. So I'm curious, out of everybody that's here right now watching, and if you're watching the recording later, drop a comment below. How active do you trade? Have you been sitting on the sidelines because you took advantage of the price action much lower? Are you still, do you have a regular schedule of, basically getting capital from the real world into this market? Are you just trying to do small swing trades along the way right now where you're trying to stack into basically get yourself as stacked as possible going into this next parabola? Mooning since before the NOS mooning since before the correction. I was just reading Jorge Satoshi's comment there. Now, coming back over here, this is looking, I'm telling you, I'm thinking we are going to come down into this level, this 37.8, 38,000. And I think we are going, I don't want to say I'm super confident. The chart is telling me that it's more likely than not that we're going to come somewhere down in this region. And remember, if I click on this chart, this is where the halving is. We're coming up on it. So let's go ahead and come out of here and look at some of the other things we want to talk about. We talked about this yesterday, talking about Solana, this downtrend that we were in here. We broke out of these lows, came up. We're getting a little bit of a retrace up into this zone. But as it stands right now, this is still looking fairly weak because we're coming down. This is just a retrace. Remember, fall, retrace, continuation. On this time frame, I'm looking at the 6 hour. You can have a rise, retrace, continuation. You can also have a fall, retrace, continuation. As it stands right now, this is looking like it's moving to the downside, right? We've also lost these lows. So fall, retrace, maybe a confirmation of that trade coming down into this zone here, the 74 to 77 sort of zone. Now let's look at Render. I remember you guys brought up Render the other day, and I meant to bring it up here on the screen, but Render, there's a lot of developments that are happening recently over the last 30 years, but more specifically, more recently, especially with AI and with Apple and with I forget what it's called, the headset they have, and just graphics processing and blockchain and integration of all these things. This is what Render is all about. Shared computational power for graphics rendering. That's why it's called Render. So we see right here, this is looking like it may want to take another move to the downside. Everybody wants to think that this pushed up is forming a base. But if we really look at this, this is looking like we've got a little bit of a rounding top here. We lost these lows right here, came down, retested this, came down, retested again, coming down. This is telegraphing to me, maybe there's going to be a move to the upside, maybe, but I'd be watching this region right here. If we take this low, if we're able to take this out, then we're going to be watching this level next. But as it stands, if I had to really bet on which direction this was going, this is looking to me a little bit like an inverted Adam and Eve, where we have this sort of move here, right? And in this case, we go like this. We take a measurement from that to the neckline, come over here, get a projection to the downside. And now I'm not even going to look to the left. I'm just going to go right here. I'm going to put a option H, do a horizontal line. I just did it at the target, and look at where this goes to. This target to the downside goes to right to where the previous range high was. So this is telling me that this is a likely target if this does happen, because it's not going into no man's land, right? So we got a couple different areas we can watch along the way. We can watch this area right here. Why? Because we have this sort of range coming up, this range finding support twice. The other thing we can do is zoom out of this a little bit, come all the way to the bottom, option F, go up here to the top, and look at this. Now that we know this move from the base all the way to the top, look at where we're finding. This is what we just saw before on some of the other projects we're looking at, right? Avalanche and Bitcoin, AVAX and Bitcoin. Look at this. Comes down, finds support on the 382 until ultimately we'll likely lose this, and then come down and test the golden pocket. The golden pocket is right in line with where that target was on the breakdown from this inverted Adam and Eve, which is also perfectly in line right about where the point of control is on this and this previous high. So there's a target box that multiple different points on this chart are suggesting right in here would be a good opportunity. Now, if we zoom this to the left, look at that. It also has to do with where this larger range high was right over here. So I'd be looking for an opportunity if Render does basically confirm this by breaking down, by getting some orders set down here in the 265 to 280 range. Currently, we're at 384. So what does this represent? What opportunity does this represent? Well, let's see. 283 would be 22%. 260 would be almost 30%. Now, if this is able to hold this range where it's at right now, great. But what we want to do, if that were the case, let's go ahead and zoom in on this. What we want to do, if that were the case, do Option T, get our trend line, come just like that. So what we're going to want to watch is the smaller zone right in here. What happens in this zone? If it does push up and break out of this, and we're watching really specifically right in this region right here, because we have all these support, resistance, resistance, support, resistance, resistance, resistance. So if this does push up into here, watch out for a potential trap of this coming up, getting rejected, coming back down, and if this does rebound and come back up or not. So things are a little bit at a very tense moment right now, pre-halving, because everybody expects it because things are so bullish and the awareness is so good and everything's, it's only going to go up, right? That's not how markets work. So we need to be careful about getting whipsawed on these price actions of potential coming up, maybe even faking out to the downside, coming up here, faking out to the upside before it ultimately decides if it wants to go up or down. So we need to be a little bit careful right now and take shots that are based on levels that we have mapped out before the move happens. So just note that. Now let's look at Kaspa. Kaspa is one of those things that's really still, I don't want to look at the MEXC chart. Here we go. So 4 hour, we got a bit of a trend line right here. Just more locally. See this? Rejection, rejection, rejection currently. Now as it stands, yeah. Now we do have some bullish divergence here on the momentum waves, but we have negative money flow, and we have the RSI came up here and it's looking like it's angled back down. Stochastics look like they're trying to roll over a bit. And this makes sense because it's coming into a known sort of resistance level. If this does break out to the upside, I'm watching right where this order block zone is right here, outlined by the BitLab trading stack. By the way, if you guys are interested in these indicators that I use here for trading and showing all the identifiable levels to really make smart calls in the market, head over to bitlabacademy.com. You can get them right here on indicators, or you can click right here on enroll in the very top one here, the very top option. This has the courses, the indicators, and the premium Discord. If you just want the indicators, you go right here. You can just order the indicators by themselves, but you won't have access to the full premium Discord. Or if you just want the courses and the premium Discord, it's right here. I want all access. Just wanted to point that out. And get in here, get in these. I mean, there's so much great stuff here in the Discord, and it's only been growing the last couple weeks. So coming back over here to Kaspa, BitLab trading stack here on the BitLab trend fuel, we have bullish divergence, but negative money flow still, but we're coming into a known trend line. The one thing I will say about this is we did break on the 4 hour, we did break above this trend signal line. If we can kind of hold here above 9.8 cents, which is a weekly VWAP, bounce back up, maybe we make a move to the upside. But it feels right now like the market's getting a little bit weighted for a potential move to the downside if we don't get a stronger bounce, a stronger attempt to the upside broadly on the crypto market. As it looks right now, I'd be a little bit hesitant to make a move here until it broke back down below this weekly VWAP or cleared above this, came down, supported, and then confirmed a move. Now let's look at a couple other things. Did I look at? I remember we talked about XLM yesterday. I don't remember if we actually pulled it up. Let's look at that. Yeah, so downtrend, rejected, coming into this zone, back down. Got a bullish signal, which in this case, on a downtrend, a bullish signal is a good opportunity to take some profits on a short. Take some profit. If you shorted this, good opportunity to take some profits. Coming into this, now look, this is beautiful on the BitLab trading stack. It's coming up into this weekly VWAP, even if it takes out the trend signal line. It's reverting back to the mean. Finds struggle here, comes back down. Right back into this weekly VWAP, back down. Right back, broke a little bit of the trend signal line, but not as much as this. So there's a little bit of change here. See, a little bit more weakness. Rejection currently below the weekly VWAP. If this does lose this trend signal line and this sort of this cloud that's right below us, I do think we're going to test back down here into the 10 cents, 10.7, 10.6, and potentially move a bit lower down here to test into this, maybe 10.4 sort of range. What's something else we haven't looked at in a while? Have we looked at stacks? Let's look at stacks. Stacks. So here you go. Here's a good example. Things potentially setting up potential traps. Why is this? Let's turn off the BitLab trading stack. Look at this. We have a downtrend resistance line, price action, bounce. Where did it bounce at? Look at this. Right on this order block. These two green, we have an order block from here and another order block that was created right here. So right where they're overlapping, right here, where there's a lot of liquidity interest, price action breaks down into the zone, finds support right when the momentum flips around too. Stochastics fully reset right in here. The RSI starts building into the opportunity. What do I mean? Look, we have a little bit of a bullish divergence. It's going to be very slight, but right here with these two lows, if we look at where we're at right here, higher low, lower low, RSI, lower low, lower low, and then a higher low. So there's a little bit of growing as all this was happening coming into this order block range. Now we did break through this smaller time frame. This is, doesn't go back too far, about 12 days. But currently finding support. If we lose this, I expect we're going to come back down and test back down here into the $20s. We're able to push back up and take out this zone right here. Oops. There we go. These highs, we're able to push up, take out these highs. You would not only be confirming this move, you'd also be making a little baby inverted head and shoulders, the little shoulder head and the little shoulder here. And I don't think this would just rip to the upside, but I do think that this would have a stronger bounce likelihood to push higher, maybe even up into this zone here, which is these lows, these highs, up into that zone. And this is not necessarily that small of a move. I mean, that's a 16, 17% move. So let's be a little cautious with what we're doing here. BNB, we haven't looked at BNB in a minute. Oh, look at that M formation there, ugly, and then straight breakdown. We got a bit of a range here, though. Bit of a range here. But it's kind of exploring the bottom side of this. I'd be looking for a move down to this zone right here, 274. Why is this? Because this is right within this order block, and it's also this previous range high. If we take this across here, there's multiple previous range highs in this zone. So this would be a good opportunity potentially if this does drop into this zone. And I don't want to explore lower because that just opens up a whole can of worms. MINA, how's MINA doing? MINA's got a bit of a trend line here as well. Rejection, rejection. 2 points is all you need to form the trend line. So let's watch. If this does push up into this, what does this look like? If this pushes up into this, it's coming right into this range right here. This previous range right here. So if this pushes up into this zone, we have not only the descending level of resistance here, but we also have an order block directly overhead and this previous range lows. We spread this across right here. All this interaction as well. And this is the area I'd be looking for a potential rejection if this does make its way back up here. $1.10 to $1.12 sort of region. If we're able to get up there. If this fails, I'd be watching for what happens when we get back down here to 9.5 cents. Because if we cannot hold here, where it's also previous range lows here and these previous range highs, then I think we're making another move lower, which would be roughly to about right down here to 85 cents. Now, is that scary? Or does that, for you, if you're holding MINA, does that give you opportunity to lower your average entry? Could you check the bird eye chart for pop? I'm not going to check PopCat just because I don't know what it is, and I don't want to bring up a potential meme coin that might have trash. And I'm not saying that's that, but try to be a little bit careful about that. I'm going to have to look at it on my own time, and then maybe in the next stream or something. Actually, let's do it together right now. PopCat, crypto. Let's see what it is. Meme coin. So I'll have to look into this a little more. 24 hour trading volume. This is what I'm doing when I'm trying to figure out if a project's worth looking at, just for myself as well. As you go in here and you look at the project, it's been around for a little bit. Since December, very new. So it's going to have low liquidity, 24-hour trading volume, 1.4 million, fully diluted valuation, 16 million, but circulating supply just under a billion. It's going to be max. This is the chart. There's not really any metrics on something like this because you have basically pump to the upside, a washout, pump, dump, pump, dump. This is the epitome of a pump dump coin currently, because we also have a lower high. So if you're going to invest in something like this, first off, I take the word out, invest, because this is not an investment. If you were to trade something like this, then use a very small allocation of whatever investment capital you have within the crypto ecosystem. I don't have any problem with anybody investing in some sort of altcoin, meme coin, whatever it is, just so long as you don't get yourself into trouble by over allocating into something that's high risk because you think it's going to make you rich. That's usually when you lose money on that asset. So small allocations, very small allocations on those, especially when they're meme type stuff, then they would, if they do pump majorly, they're going to have multi-1,000% gains. So you don't, if you have a $10,000 portfolio, you don't need to have $4,000, which is 40% of your portfolio, in a bunch of very small micro cap coins, because the reality is the majority of them are going to fail, or if they do pump, you're not going to have the strategy to pull them out in time. Very small allocation to these things. Chainlink. Let's see, where's my link? It's Filecoin. Hold on, where the hell is Chainlink? There we go. Link, rising broadening wedge. Talked about this. Broke out of this rising broadening wedge. Came down. So we had a fall, retrace. Now, is this going to be a bit of a bear flag? You see this right here? If this was a bear flag, then this would be boom. This target would be, ooh, look at that target. Target would be right into the order block directly below us, which would be representative right where there's a little bit of price interaction over here as well. That would represent price coming down to about 1234, which I would not be opposed to that. And effectively, you still would have a high, you would not be breaking this wick low here. So you'd still be looking relatively good on that. But anywhere in this range, I would say anywhere 13 down to anywhere below 13, I think would be a good area to start setting up a ladder. And this is the areas that we marked out last week, or it might have even been yesterday or the day before. Golden pockets down here at 11. And then this target down here, 967. Now, what is this orange line you say? Let's look over to the left. These range highs, when we had this long term, this is a multi-year range that we had, but this is where this is representative of where that range high was. So, and it's also roughly about where the 786 is. So would you be buying Chainlink if it came down to 937? 937, 967, anywhere in this range? That would be amazing. I don't know if it necessarily will, but I would essentially save myself the headache of just trying to buy everything just because we get a little dip and then it drops lower and you're like, God dang it. Break up your entries so you can get some at this level. You can get some at this level. You can get some at this level. And if it doesn't reach these lower two levels, then that means you still have that dry powder available to look at all the different altcoins and different projects in the ecosystem that maybe haven't moved yet, or maybe you just don't feel like you had allocated into correctly, or you have that available if there's a dip that comes in the future. You don't need to be 100% in the market all the time. Know that. Let's look at a couple more and then we got to go. Dot, look at that. Look at that. Saying, hey, I'm going to try to break down. Look at this shoulder, head, shoulder. Ugly. Golly. And it's coming up to test that neckline. What am I talking about? This is neckline right here. Let's go ahead and remove this. I don't know why that's even there. So there's a neckline. This is, textbook of what we see on breakdowns, especially if we're potentially looking for an opportunity for lower prices, is price action come down, come up, retest this previous line, and then continue breaking down. Now, as it stands right now, because everything's such on a short trigger about what's going to be going on with the market, everything going on with Coinbase and SEC and the lawsuit that's going, not the lawsuit, the litigation going on between the SEC and Coinbase, the judge told the SEC that they're going to need to come up with the list of what is a security and not, and all the coins that are on Coinbase, because they're just kind of blanketly saying stuff. This could have a major impact on what happens with crypto market, with different altcoins. Some may absolutely moon from this. Some may get crushed, depending on how that list comes together from the SEC. So not everything may not run together this cycle. Some things may get suppressed. Some things may explode. So we need to be aware of this. So now look at this. Price action, where did it go when it broke down? It broke down right to bounce on where this previous order block is right here, as well as look at this trend line that comes out right here. If we extend this out, let's extend this. Oops, my bad. Let's get that. There we go. Extend this out and look at where the price came down to. Price broke down, came just shy of this order block, but the extended trend line from this, I mean, you could call it a head and shoulders. It's not really inverted head and shoulders. You could maybe call it a cup and handle, but similar aspects that are showing structurally this wanted to break to the upside. And now what is it doing? It's coming back down and testing that zone. So there's two arguments that can be made here. There's a head and shoulders here that suggests that the price action would be coming down quite a bit lower. And this would be, if we do this like this, this is saying that we potentially could be seeing price come down to $4.60. I don't necessarily think that's true unless one of those big things we just talked about were to happen. What I would think it would happen here is we have the signals that are, this suggested this move to the upside. We got it. We still never came back and tested this trend line here. Now we've come back and tested it. So we may get a little bit of a range in here and maybe a dip down into the zone. But if we did dip down into these zones, I'd be a net buyer here at anywhere below this line between this and $5. This may, as I said, range in here with one washout wick to the downside. We're going to have to see how all this plays out because we did get a little bit of bullish divergence, but we still have negative money flow. Sometimes you're going to want to trade. Let me get set for this one. Sometimes you're going to want to trade. You're just going to feel it. You see other people making money in the market. You see people posting videos on YouTube. You have a friend that just made a lot of money and you just want to get into a trade. So you get in there, you see something moving and you jump into that trade because you see a green candle. Then you get wrecked. But why'd you get wrecked? Because you're not using a strategy that's allowing you to identify when multiple data points suggest this is a good opportunity. And that takes patience. That takes courage to allow a trade setup to develop and take a shot on the trade before that move happens. This is why risk management is so important. This is why patience is so important. And this is why knowledge and understanding how these different trends and markets and indicators work. And so that's why we talk about all that here. That's why we talk about all that here on BitLab Academy on a daily basis so that you can stay ahead of the trend. I don't want you guys to lose money like I lost early on. I want you guys to succeed and learn from my mistakes so you don't have to make them. You don't always have to be in a trade, but you should always be looking for a setup. That is absolutely the best words that somebody told me years ago, and I hope that you all hear that as well. But I think with that, everybody, make sure you head over to the BitLab Academy Discord, especially if you are a BitLab alumni, if you're in the BitLab Academy. Share some stuff. We're doing a lot more postings, sharing convos and good mornings, but then also the VIP charts. I was breaking down why I thought this was a dead cat bounce in here as well. We got some gym calls, gym chat, stock trades, scalps, Joshua Jake's watch list of different coins that he's watching, for huge gains. Deezy's talking about some of the trades he's got. We got classroom sessions in here. There's just so much going on in here on a daily basis. And make sure that you get your taxes done. Don't get behind the ball on this. Think about it. If you get this stuff nailed and you get it handled, then you will be able to likely get that out of the way. If you get money back, you can get it back in the market. Check out decrypted.tax/hit. Get 25% off your the pricing, but you can also get a free, right here, free 60-minute consultation talking about your crypto. Having a crypto tax professional do it. It's the best way to do it to make sure that you don't get yourself in hot water. I love you guys. I appreciate you. I hope you all have a wonderful day, and I'll see you in the Discord. Adios. Adios, muchachos. Thank you for watching. Thank you for always tuning in. Hope you have a good day, everybody. Shout out to Sam Thomas, new member. Big love to you, my friend, and thank you for the super chat.